to our weekly update on the real estate market and lending industry, the rates. Tim, welcome. We always appreciate your input. But before we start bombarding you with the questions, I would like to give everybody a brief update on what's happening. What happened this week in the Metro Atlanta real estate market? So, as you probably already heard, we're watching the market on a weekly basis and trying to put together a trend direction to see where the market is going, because a lot of talking heads suggesting market crashing or market staying the same. Basically, everyone has its own opinion. Depends on their agenda. But here's what's happening in Metro Atlanta market. What happened in the week? We're watching new listings to see how much new inventory we're going to get. And there's literally a very slight change from the previous week. So market is not getting flooded with the inventory. Again, this is Metro Atlanta. Not just one specific area. Number of homes sold is slightly down, but keep in mind that homes sold is past time data. These numbers show how many homes went on the contract at least a month or 2 or 3 months ago. So that's not exactly a home sold, not exactly an indication of the current market or not showing the current trends. What's important to know if you're trying to assess the current market, like what's happening today, is homes under contract. And we see that compared to last week, this week we see, I would say, 15% increase in homes going under contract. So despite all the horror stories, despite of prognosis on market crashing, we feel that buyers are still trying to get a hold of favorable interest rates. This is why they're getting more active and putting homes under contract. Price decreases, really minor change compared to the previous week. So except for, it looks like buyers are more active in putting homes under contract. So if you're a seller, you can still benefit from strong sellers market. Team, giving floor to you. I was wondering, what are the most common questions, if you can isolate one or two questions that buyers ask you at the first phone call, first interview? What are they concerned with?
Well, I think with the way the interest rates are covered by the media, I would say almost all buyers are aware of where interest rates are, and they know them in the abstract, meaning that they know the rate is 6.5% or 7% or whatever the rate is. They probably really want to understand, okay, what does that actually mean to them when they buy a home and when they budget themselves to say, okay, sometimes they'll come to me and say, I want a payment of $2,700 or less. And then that factors into, okay, well, if you're doing it that way, then we need to look at what the interest rates where they are today, understanding that that way you're going to be at where you're looking to buy from a payment standpoint, and assuming that the house that you'll have housing you'll have available in that payment range will make sense for you. So I think that's the biggest concern. Before, I think because rates were so low for so long, buyers were unconcerned about interest rate. They basically assumed that the rate was at 3.5 or below 4%, and it wasn't changing very much. This last 6 or 8 months has changed everybody's perspective because they've gone up so fast. And it's slowed now a little bit, but their concern is, well, what happens if they keep going up next, and continuing to go up. So should they wait, or is it better to get in now, lock in a rate, and then, hopefully in the future year or two, you can refinance because rates have come back down again. So I think that's the calculus is going into the minds of most buyers. But that's the conversation, from start to finish, is about what their payment is, what the interest rates are. The biggest question is, what if interest rates go down, can I get a lower rate? And we can talk about that later, but that's certainly one of the things that they're always concerned about, is how they can get a lower rate.
We can get the rate down. For instance, I'm a buyer and I'm not happy about the monthly payment that you projected. Let's say I'm not happy with 3,000 a month.
Right.
What would be your advice? How we can bring that payment down?
There's two avenues to go, and these are two things that because we get this feedback, we've kind of devised strategies or action items to try to accommodate these kinds of questions, because obviously they're calling not just us but other folks and asking the same one. And the answer is, to get a lower payment, we have one option that is an immediate solution, and that is our buy down, which means that we'll be able to buy your rate down for you, meaning that for the first year, a single year, 12 months, your payment would be 1% below what today's rate is. So let's say today's rate is 6.75. That means you'll still qualify at 6.75, but your payment will be 5.75 for that first 12 months. Afterwards, it goes back to 6.75. So it's not a permanent solution, but it also may give you the opportunity to refinance while the rate, let's just say we're at 5.75, you're in that first year, rates have dropped back down below 6%. Now you may want to go from, your current rate, you might want to refinance into a fixed permanent, rate of 5.75, 5.875 as an example. So that it gives you like a 1-year payment reduction at no cost to you, but eventually they will go back to 6.75 if the borrower doesn't refinance. That's one option.
Who is paying for that buy down? Buyer, seller?
That's a good question. Well, the answer is anybody can pay for it. In other words, the seller can pay for it and seller pay closing costs. The buyer can decide, I want to pay additional money to buy the rate down. Right now, what we're doing is certainly as a reason for folks to want to work with us, but also because we realize that, that 1-year buy down is going to give somebody a chance to have that payment lower for a year, in which time hopefully there's an opportunity to refinance. So we're paying the cost of that. There is a cost to the buy down. We're basically building that into the cost that we're willing to pay to get buyers into homes and give them that 1-year reduction in payment. So
just wanted to reiterate again for our viewers. Different brokerages offering different lending institutions offering different type of buy downs. Many of them saying seller must pay for it, otherwise it's not gonna be available to you as a buyer. In case of Security National Mortgage, Tim and his company is paying for that 1%. So it freeing up more opportunity for you as a buyer to ask for more concessions from the seller if you want to actually buy more of a percentage points rate down. So, and as we mentioned before, the percentage of sellers willing to pay concessions, closing costs, so to speak, to buyers is increasing day by day. The prices may not be going down as much, but sellers are willing to pay your closing costs, anything from 10 to even 15,000, and you can allocate this money as you see necessary buying your rate down or just simply using it towards closing cost. Is that right, Tim? That's what you see?
Absolutely. No, that makes, it's exactly right. So just to be very clear, the cost of the 1 year buy down, meaning the 1 year for a lower interest rate of 1%, it costs approximately 1%. So if you have a $300,000 mortgage, there's a there's a $3,000 cost for that. Mm-hmm. That is what we are, taking as the cost that we're paying. Otherwise, if we didn't offer it, then either the borrower could pay that extra money, or in your example, the seller would pay the $3,000. In this case, hopefully the seller comes to the table with something in addition to our buy down, which gives the buyer even more of an opportunity to save in terms of money out of pocket at closing. So.
And that cost of additional buy down, the 1% of purchase price or 1% of the mortgage amount?
The loan amount. That's right. The loan amount. That's right. It's not the mortgage purchase. Or not the purchase price. Excuse me. It's the mortgage amount. Mm-hmm.
See, well, it's even better. So it would be if the price, if the mortgage amount is $500,000, then you can ask seller to contribute towards your closing cost. And you can use it at your own discretion. You don't have to say anything to the seller. You want to use it to buy down 1%, right? It will cost you about $5,000.
That's right. Assuming we don't provide that option to somebody, it would probably, on an average, cost you around 1% to buy the rate down for 1 year.
And both strategies can be used for the same borrower, right?
That is correct. Yes.
From, your offer, right? 12 months rate reduction by 1%, and buying down points if
yes,
you want to do that.
100%. Absolutely. And you're talking about the seller paid contributions could be used for any and all of those things you just talked about. Yes. So
yeah, that's wonderful. That's great news. That's probably why buyers are figuring out, and this apparently what we see in increasing number of homes going in the contract lately. We would like to wrap it up and wish everybody a great great remaining of the day. And please just reach out if you have any questions.
Happy Halloween.
Oh, happy Halloween. Yes. Thank you, Tim. Appreciate your input. All right.
Bye.